Hi everyone, Don Singletary, and today you can take a look at the screen now for my standard setup. I use the NASDAQ100, the MACD in the bottom pane, and the 5-minute increment candlestick charts in the upper frame. And while you're studying the setup here, and it is the same one, and I use the same setup every time deliberately because it makes it a lot easier if you're new to all these things to see familiar things when you look at the screen, and you'll learn faster that way. And today I'm going to go over some of the thoughts that run through a trader's head during a trade. What do you think? How do you use the volume? What do you look for in the candlesticks? How does that relate to what's going on with the MACD? Some of those things. So let's get started. And I'll start you off with an easy one. It's 9:30, the gates are open, the trade is on. Here we see the market takes off in a bullish direction. We've got two strong candlesticks, and after the market settles in, I don't like to buy and sell right on the opening. I like for the market to be a few minutes old. So at 9:40, I buy in at a price of about 9.090. And as you can see, the momentum continues up until about 10:25 to 10:35. I can see the green line is topping off, and it looks as though it may converge with a red line. Now I'm up at a price of 91.45. I got in at 90.90. That's a 55 point or $110 profit. And you can see for the next 35 to 40 minutes, each of those candlestick widths are 5 minutes. The market does basically nothing. So I feel pretty gratified to have gotten out when I did. And that's a good example of how you can use the MACD to both get into a trade and also know when to get out of a trade. And remember, the first rule is always do not lose your money. And as the joke goes, rule number 2 is never forget rule number 1. Now, there's nothing I'd rather tell you than all your trades are going to be as easy as the one we just talked about. But it just isn't true. In fact, they're pretty rare, but they do happen. So I wanted to show it to you so you'll be ready. When it comes your way, you'll be able to grab it. I get a lot of questions about the setup here. I use the standard setup. A common question I get is, which one of the Micro E-minis should I trade? My pet answer is the NASDAQ100 because it's not too narrow like the Dow Jones and not too broad like the Russell 2K index. The S&P500 or the ES E-mini is a very good one to trade also. It's $5 a point. But to begin with, I recommend the NASDAQ100. It's a nice broad average. It has all the tech stocks in it, so it's very Dow sensitive, and it's maybe a little easier to trade than some of the others, except for the S&P500, which I also do like a lot. But to keep things consistent here on the channel so people can learn more easily, I'm using the NASDAQ100. And if you do trade the Micro E-mini S&P500, it's probably okay to use the same setup. I have the 5-minute increments candlesticks, and I get a lot of questions about how I set up my MACD, which is in the bottom pane. So I'll go to the screen now, and I click on Indicators in the Tastyworks, and you see I have the volume gray bars, and I also have the MACD. Now when I click on Indicators and I go to MACD, I just go down the page and I see the 3 values that are indicated on the MACD chart, the value, average, and difference. And the style of each one, click the style button, you can see the value is the green one, the average one is the bright red, and the difference I've selected is the bright green. I have a width on the bright green of 1, and when I go back to the value, which is the dark green, I put a line width of 3 on there, and I select a solid line. And the same setting also for the average, which is the red one. I have the width of the line at 3, and the line is a solid line. And that's how I set it up, so I can say the green line's over the red line. And I use it, well, it's easier to see here on the videos, so you may prefer a different color, and that's okay. But green over red is how I've decided to set it up here. And I hope that helps you get your setup on Tastyworks. By the way, there's a link below on the things that you really want to demand if you're looking for a broker. And I have some notes there about Tastyworks. Look for Tastyworks in the text below. That'll take you to an article about how they operate and what you can expect when you pick a broker. A lot of video instructors do live trades on the screen, and I do those occasionally, but right now I want to, there's nothing wrong with your screen, by the way. I have taken away the genius of hindsight. The whole trade's been done, okay? But I'm taking you back to the very first moment at 10:05 a.m. You have the MACD lines. Remember our conditions to go into a buy. The rule of thumb, the guideline, there are always exceptions, but that is that the green line be over the red line and that both of those lines be above the zero line on the MACD scale below. And what happens is this triggers a buy signal at about 10:05 a.m. to buy this NASDAQ100 Micro Emini at a price of $92.62. Now, I told you the story has a happy ending, but let's go through what you got to do to make it from the beginning to the end of this trade, because you can see immediately when you buy the trade, the green line has a peak and then starts going down. And often that's a sign to get out of a trade, but I'm not going to get out of this trade, and let me tell you why. Because the red and green lines are still well above the zero line, and we're going to have to take a little bit of risk, a little bit of drawdown here in order to complete the trade. And it's going to have a happy ending, but when you are blinded, as you are now, by the big black rectangle, you don't know that. So you start thinking, I've got to make a decision. Do I get out of this trade immediately and make it a quick trade that meant nothing? I'll break even on it or even make a couple of bucks, but I'll get out. Or do I decide to hold it? Well, the reason I decide to hold it is because both the green and the red lines are up around 5 over the zero line on the MACD. And so I'm going to stick with this trade a little bit, and I have to decide how much I'm going to risk. Now, I can't answer that question for you. 20 or 30 bucks is probably reasonable, but on any given day that can change too. I know that sounds difficult, and that's because it is difficult sometimes. You have to be able to have a certain risk tolerance to remain in a trade like this, and you have to be able to accept a loss if it happens and not let that loss overtake you. In other words, don't let it keep mounting up with the loss and you substitute hope as a strategy. Hope is not a trading strategy. It will run you broke, so don't do it. Aha, now kind of taking the pants off of this trade so you can see what's happening here. And you see it's a beautiful trade. It's going to make 58 points. That's $116, which is great. But let's go back to our difficulty here at the very first part of the trade. And you probably would have some difficulty somewhere around 10:15 to 10:30 when that green line turns down, and then it flattens out very quickly in about 5 minutes and still stays over the red line. So, you know, we just get a little lucky there, I guess, because there's no way we could have known that for sure. Let me tell you something. If this trade had gone the other way and you had a $30 stop and you lost the $30, you're going to second guess yourself because you don't like to lose money, you don't like to be wrong, and it just plain isn't fun. And that makes you just like me and everybody else. But it does happen, and that's a part of trading. So you got to learn to accept that. In this case, that little distance between the 10:15 and 10:30 in there, where it looked like the trade could go either way. Once you get past that, this is a trade that has no drawdown and runs smooth as silk all the way up till just about afternoon, and you see the red and green lines look as though they may converge there. And when you've got a profit of 58 points, $116, and you see for the last 30 minutes up there, the market's been flat, you want to take that profit. You do not want to give it back. It doesn't matter. You may get out of the trade and you would have made $300 later, but you have to be able to take those profits, and they just aren't running anymore because the market's leveled out. And also sticking there, as you can see with this trade, you could have spent the whole afternoon with it and probably would have come out just about the same. So you also have to consider the wear and tear on your nerves and on your patience and things like that. This is all happening between your ears, and everybody is different. I'm just trying to give you some things to think about when you practice trading or when you're in these trades for real. You know, I looked at this trade still, and there's another outcome that another trader might have taken. Look at the time period in there between 10:45 and 11:15. The market's flat for 1, 2, 3, 4, 5, 6, about 30 minutes there. And at that time, the market was up to 92.80. You would have had an 18 point or a $36 profit there, and you may have said, well, nothing's happened for 30 minutes. I'll just take the $36. Now, if you do and the market goes on up, you're going to feel bad, but there's no way you can know things like that. It is impossible to predict them. You can only go by probability. Now, what I would have stayed in this trade, the reason I would have stayed in is because I would see that this red and green line during the whole trade, even when the market was flat from 10:45 to 11:15, what was happening down here with the MACD is the momentum for the trade was increasing. It went up from 5 when we placed the trade all the way up until 12 to 15 there. So there was a forward momentum with this trade, and for that reason, with some experience, I would have stayed in the trade probably. But if you take a $38 profit after a half-hour trade, that's not a bad thing. But you just pick these things apart so you can learn after the trade how you could have made better decisions. And don't forget that MACD is down there for a reason. Use it. Well, that's all we have time for today, but would like to ask that you click this symbol. It's down in the lower right part of the screen. It subscribes you to the channel, and you'll be notified when the next new video comes out, so you won't miss it. I would appreciate that. Also, your comments, and hit the like button if you don't have time to leave comments. It lets me know that you need more videos of the same kind that you're seeing on this one today. And that helps me plan my videos so I can get to the material that you have told me you need the most. And one more thing, if you don't mind, before I go, please check out my book. It's on Amazon.com with free Prime shipping. And there's a link below that says book, where you can read more about it and make your own decision on that. This is Don Singletary. I hope every day is a payday for you. And thank you.